Good morning. I'm Lex, and this is the Trader's Workshop. Today on the show, we will have a look at a ratioed back spread that went wrong. And guess what? Earnings season is back. We'll chat a little bit about that. I've done a few things in that field as well. And finally, a look at curating your watch list. All this after the bell.
You switch hats in the intro.
What'd you say?
You switched hats right in the intro.
What'd you say?
It's like a costume change at a concert.
I know.
Like Taylor Swift over there.
I know. How are you guys? Good to see you again live. It's been a while. I know I've been on a little vacation, toward the end of 2025 and blah, blah, blah. So we had a few reruns. We get it. But we're back in the new year. I'm trading more than ever, by the way. You guys look like you're frozen. Are you guys okay?
No, I'm all right. Can you see me?
Speaking of frozen, it's frozen around the goddamn country, isn't it?
Yeah, I think that yesterday was the first time we got over freezing in a while. And we're in Virginia. Yeah. I'm not used to that.
Well, let's get to it. So I mentioned earlier, or just a second ago, I don't know. I'm trading like a junkie lately, like more than I should be. It's an addictive personality. And when you can sit in front of a computer with everything there and just start clicking buttons, it's a bad thing if you don't have any discipline. I just discovered that. It's like eating too much candy or something. I don't know. I just keep eating popcorn and chips. I can't stop. However, I do have some stories, okay? And I want your take on these things, right?
All right.
So let's go. Let's start out with what do you want to go? You want to go earnings season, or you want to do that second, and or the ratioed back spread?
I don't know. I want to talk about undisciplined Lex.
Yeah, well, there is part of me that's undisciplined, but I'm discovering things. Remember, I told you I'm discovering the secret to retail trading.
Oh,
I mean, assuming you're a manual, doer like I am, not a bot kind of person. So, but you could program your bot to do the same thing. So, Mark and Jason and we talk a lot about the science behind trading, the mathematics, the Greeks, all that kind of good stuff. The other day, someone said, "Hey, Lex, you got a huge portfolio of positions everywhere. What do you think your Greeks are?" I go, "I don't know. I don't know. I don't know what my deltas are. I have no idea. I just know that I have this SPX thing on. I sold it for $2.40. I'm hoping to buy it back for $1. It's working. It's at $1.20. I'm trying to buy it back for $1. I go, I don't know what my deltas are. I don't know what my Vega is. I don't know what my theta is. My theta is probably positive. That's all I know is that I'm trying to buy it back for $1. And when I buy it back for $1, guess what? I made $1.40. That's what I know.
This guy up here made me pay attention.
Mark, say something. Slap my hand. Put me in the penalty box. Do it.
You mean like for a high five? Because it's all about dollars and cents. That's the only thing the IRS cares about, and that's the only thing you should care about as a trader.
Yeah. Now, I would preface all this, or at least qualify it, by saying that in the pro world, like where Mark and I came from, it's a different answer. Inventory is forced upon you in a way, right? You have natural inventory as a pro trader. You have to take a sale and you have to take a buy. So that gives you sometimes inventory that you might not necessarily want. So now all of a sudden you need a set of dials in the cockpit, the Greeks, among other things, to sort of guide you through the fog and get you to a happy place. Because of you have these things that you might not necessarily want. Now, with retail trading, you as a trader get to pick what you want, right? You go out there in the marketplace and say, I don't want eggs because I don't like eggs. I want the ham. Gosh darn it, give me the green eggs and ham. And if you do that, then you have this natural inventory. And quite frankly, it's all about price after that. Now, more of my tirade here. It is nice to know what the dials mean. It's nice to know what delta, gamma, theta, vega, rho is, but do you need it to be successful? Not necessarily, is all I'm pointing out. Comments? What do you guys think about this?
Well, so I was actually just writing this in today's edition of the Till that will be forthcoming. But one of the comments I had is that, Greeks are like really good for a risk manager in that sense, right? That's why we have theta limits. That's why you have vega limits. It's a great way to identify what's a big complex soup of a position that isn't just, a call spread or a butterfly or whatever.
Right.
At the end of the day, when you're having that glass of wine, how are you talking to your buddy about what your position is? Are you saying I'm short 2,400 vega? Or are you saying I'm fucked if vol goes up?
You're right.
Or are you saying I lose if it goes there, I win if it goes here? Yes, there's vega, there's theta, there's gamma to all of that. But at the end of the day, even the most sophisticated traders are still thinking somewhat directionally.
Right. 100%. Now, on top of that, I found that I'm directionally challenged. Okay. I need Jason's help to tell me which direction things go. I'm terrible at it. And I'm like a typical, I don't know if it's typical. Maybe you're not like this, Mark, but I'm like a typical old school trader. I fade everything. I don't know why. I have no idea why. I mean, if Cat, I've been trading Cat, CAT, the tractor company. It's been up like every freaking day, double digits for weeks. I go, it's got to pull back sooner or later, right? So guess what? Uncle Lex gets in there and fires out the short call spread, right? 10 points wide, and the stock goes up another $10. Ugh, right? Well, guess what? What were your deltas, Lex? I go, I don't know. I sold it for $3.15 and it's trading $4 right now. I'm out 85 cents. I don't know my deltas. I know they're short, but I'm down 85 cents. So anywho,
that spread, Cat's down $15 today.
Yeah, so it's great. I unbelievable. I held the spread. I put more on up above it, held the spread, decided to get cute and sell a put spread. Okay, make it into a funky iron condor. Mm-hmm. Well, I was a genius selling the second spread, keeping the first one. Now Cat's through the first strike. The second one's in the graveyard practically, and it's through my put strikes now. So I've got a double call spread, credit spread, and a single put spread. So I'm still making money, but I kind of messed it up a little bit. It's amazing. I mean, I'm like having more fun than a kid in a candy shop right now with this stuff.
Lex is just out here vibe trading.
Oh my God, it's vibe trading. So the point there is, don't do what I do. Have some idea about direction, or better yet, I say I'm in the school of I have no idea about direction. In which case, I'll use a chart to see if it's at all-time highs or near lows, and then I'll kind of position my condor, my double selling strategy around that. And you know what? Here's the discipline. Someone write this down. You must have an exit strategy. Mine is very specific. And when it gets there, I don't even think about it because I'm always wrong about getting more. But you know what? I don't care. I know it works, and I know when I need to get out or roll at the same negative side of an exit strategy. So when I can do that, very happy. And I do it religiously.
Analogy, but someone told me recently that traders need to be like firemen. You need to know where the exits are before you go into the building.
100%. I do that. That's funny you say that because I'm like an usher in church, right? So I stand there. I'm supposed to kind of look around the place in case there's some scariness. You never know, right? And I'm supposed to know where the exits are and what the pattern is, but it fits my personality just fine. I know where the exits are, right?
Yeah.
That's a good analogy. All right.
I like the exit thing, but I use the Greeks because I can sit there and say my short strike on this butterfly is here, but I'm negative deltas even though the short strike is above me, and I'm like I have to know these things in order to effectively trade, make an exit strategy, all that kind of stuff. So I build my trades around my Greek positioning. And as far as what Mark said about when you go out with your friends and talk about your position, I never do that. And the reason why is because then they start asking me questions. That is the worst. And then, especially there was this one person at my kids' Boy Scouts, because all the dads have to stay there in Boy Scouts now. And they know what I do, and they're like, so what's Amazon going to do? Stop.
Right.
I hate those people.
Yeah. I don't know that. I don't have an answer to that one either.
I
All
say,
right.
it's either going to go up or it's going to go down.
Right. Good points by far. Definitely good points. Okay. Let's talk about a 2-by-1 ratio back spread. Okay. Do you guys call it the same thing?
Yeah.
So buying
ratio.
2, selling 1. You don't see a lot of that. I don't hear a lot of that in the retail world. I know people use it. But let's go to the screen real quick and watch my chicken scratch. Okay, here it is. Oh my God, look at this. All right, what do I have? Google. Calls on the left, puts on the right. K is strikes down the middle. This was an actual trade. It was a disaster. I messed up. I must explain why. Stock was trading 320. Mark, how do I say it? Do I say I bought or sold this when I buy 2, sell 1? I think I'm buying it, but I'm buying it for credit.
I generally use buy and sell to refer to the cash flow direction.
Okay.
Great.
Well,
Yeah.
so then I sold this. Yeah, I just don't want to confuse people and say, well, wait, Lex, you're long 2 and short 1. Why did you sell it? It seems like you're buying it. That's all. That's the only point I'm making. But nevertheless, it's a back spread, meaning I benefit by movement of the underlying. So I'm short 1 on the 25 line, 325. I'm long 2 on the 335 line. What else is this? This is also a 1-by-1 credit spread with an extra call attached to the top side of it, right? Do you see that?
Mm-hmm.
Okay. So where does this thing go horribly bad? Jason.
What expiration is this? Because that's how it goes bad.
Okay, good point. That's an excellent point. Let's pretend it's expiration Y for now. And it's got 20 days to go for now.
Okay.
Okay. Good point. That we'll get to that in a second. So
if it's 20 days to go,
yep,
you should be okay immediately, but that's probably a debit because those 3.
No, this was, believe it or not, yeah, you're right. So 20 days probably isn't good. It's probably 10 days, but it was a credit. So I did get a small credit for it. It's like 50, 70 cents. Okay.
Yeah,
so I'm going to put that on the board too. Okay. Credit. And I'll tell you why I love and hate these at the same time. Okay. 70 cents credit. That's what I got for it. Okay. You made a great point. So we want this thing to either go down a lot so that I collect my 70 cents. That's the most I can make on the downside, right? Or we want it to go up a lot because I have that extra call, right? But the bad news is if it drifts up to 335, time goes away and days go away, and I'm stuck at expiration week with 3 days to go, and this thing's like making out with 335 the whole week. Guess what happened? It was making out with 335 the whole week, and I didn't do anything about it, right? And Google, up or down $10. Now, I will tell you, the spoiler alert is that on Monday, after I got out of this thing for a massive loss, Google ran $10 on Monday. Gap $10 up. Okay, so timing's everything, right? So anyway, look what happens at 335. This is my graph, my chicken scratch graph. Worst place for this thing. It hovered around, I can't remember the exact price. 330, 334, 331, 340, or 336. The best I got was 338. I started making a little money back down to 334. I'm sitting there doing what? Praying. Come on, hoping. You can do it, little fella. Come on, baby. You can do it. Well, this spread ended up being pretty much at the worst possible spot. I lost a lot of money on this by being stupid, right? And the stupid part of this is what Jason just said. I had 20 days to go. I could have managed this. I probably had a profit at some point. Probably could have gotten out of it. Maybe it didn't hit my level, but maybe it did. I'm thinking home run. Here we go. Let's go, boys. Give me one for the home team. Didn't get there. I waited to the last day, and I had to, make a call and save myself $1 among all things, right? Who cares at that point? But this was a massive loss relative to the sizing that could have been avoided. So, any comments, questions? I know you can just say, Lex, you're stupid on this one. We get that already. What should we have done with this? Assuming we liked the spread and we wanted to do it and blah, 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 for other various reasons.
So for me, whenever I have a ratio back spread, my stop is my theta position. So I have to pay attention to the Greeks.
Okay.
Like if that theta is going up too much, I have to get out.
Right.
I also only do ratio back because theta is your worst enemy here. I only do ratio back spreads on much longer term trades, stuff like 2 months, 3 months, and that way theta doesn't hurt you. If it's your enemy, take it out of the equation.
Good point.
You won't make as much if if that short call vertical is the winner, but if it goes down and you make some money on the short call vertical, you could also sell that call vertical and keep your put or call or whatever you have there.
Yeah.
So you can manage the trade a little bit.
Sure.
On ratio back spreads, for me, I need a lot of time.
Right. Absolutely. Yeah. And that's a good point. How do you manage this a little bit? Well, if it goes really far up, you certainly get out of the whole thing. That's for sure. You could sell your extra call and you're left with a short call spread. It's going to be a freebie because you already paid for the whole thing.
Mm-hmm.
Right. So you're gonna have a free lotto ticket on the short 1x1 spread if you sell that extra call.
Mm-hmm.
If you're still super bullish, you can sell one call spread on it and keep the long. I wouldn't do that, but it's certainly doable, right? Mark, any comments on this?
I don't know if you picked this spread particularly to force me to agree with Jason on the use of the Greeks, but I do think I have to agree here that, from the first question he made about what expiration this is, it highlights the time aspect to this whole kind of trade, right?
Bingo.
That and if you have that decay curve, like you can see in Tradier Pro, how over time, where that's going to be if stock doesn't move. This is a 30-day trade, for example. The first 15, 20 days, that's barely going to budge. Even if you're sitting right, making out with 335, like you said, it's, your P&L isn't going to be so bad, but it eventually hits a trip point and you stumble right into that valley of death. And using theta, using, something like that as an indicator, you could use dollars and cents too. I'm still going to kind of lean on that a little bit, but using that as an indicator there, I think makes a ton of sense because this trade's all about timing.
Right. 100%. So I would tell you that it's theta positive, down here, and it's theta negative clearly up here, right? In this zone here and slightly beyond. At some point, you're going to get parity to the upside. You're going to get parity on everything. So the theta is going to go away, but you're making it on movement, right? This to me is, it's a movement play. It's a bold move up play and a move down play. It could be a slight move down or stay beneath that strike, either way. But you can't have the hug fest at 335 because yes, thetas will be horrible for you, and it's just the worst possible place you can be. I need another $10 to break even on here, right? Because I got a 1x1 spread on 10.1x1, and I got an extra call. I need an extra call to go $10 higher to break even than a $10 spread, right? So I lose the 10 and I make the 10. So at 345 I break even. Now, if it happens before the expiration, like Jason and Mark said, and it's a 60-day and it happens at day 20, you're going to be fine here if it goes to 340. You're gonna be able to get out of this for a profit. But once you get to that last week and the clock is ticking, the ice is melting, boy, you got to get moving. So I didn't do that. I waited, and I should have done it the week before. I had a profit in this, and I was like, oh, look at you, fancy pants. I'm gonna go for the home run, but no bueno.
My other comment on this trade would be that, you look at the, P&L chart of it, and, a lot of the places it gets used, whether on the upside or commonly you see this used as kind of like a hedge, like with puts, that it's like a downside sort of tail risk hedge. That chart looks great, but you got to pay attention to the credit here and what your max risk is. You got to come back to the dollars and cents. And that, if, I've done some work, back testing these as a hedge because that commonly gets thrown out. And yeah, it does help an equity position, but it helps because of the credit because you're extra bull. It doesn't help because of the bear. It helps because you're collecting money in bull markets and you're losing just as much to those valleys as you are to those, 2 standard deviation tails that you actually, do make some money in that. So
that's right.
On the tail side, your money comes from the credit. Yep.
Perfect. Okay, let's go. Let's jump back. We can bump out of here. Let's move along to earnings. Okay. So and by the way, folks, if you have questions on what we just talked about, you don't understand it, you're certainly welcome to send me an email, lex@tradier.com. I'd be happy to answer. You can jump on a call with me. I can see that link, or put some comments in the comment section here right now if you want to do this live. But happy to talk more about this. We're going to move along to earnings season. Okay. So earnings season today's Thursday. We've had some good ones. Last night was Google. I'm just looking at the board right now. Sorry. AMD was earlier this week. Chipotle. This kind of dovetails into the curating your watch list a little bit. Okay. Tonight we have Amazon, MSTR, which is they hold all the Bitcoin stuff, right? Affirm seems like a pretty good one. So those are the ones that I see that are pretty good. Why am I picking those particular stocks? And again, relative to your watch list stuff, do you think? Any thoughts?
You like them?
I like them. I don't know if I like them. I like them.
That was my point.
Okay, I like them. I know them. They are super liquid stocks. Okay, I'm talking about options wise. Their markets are tight. They have a lot of volume, a lot of open interest. They trade a lot. I have gotten myself into trouble again trading illiquid stocks, and again, talking as a retail person now, not as a market maker. And I've done some dumb things relative to it. But you know what? I'm all about doing dumb things so I can teach people what not to do. But
should we rename this the support group?
This is the support group. So I guess my point here is that the earnings season, you know what I like to do on earnings season. I did it in Palantir on Monday, I believe was Palantir, if I'm not mistaken. Does that sound right, guys? So I did a double diagonal. What does that mean? I sell the front month super juicy premium the day of earnings. It's going to announce at night. I manage my expected move based on the straddle. Again, I'm dropping grenades. It's not exact. Get my shorts right about that expected move. And then my next month, I buy a strike beneath the short put in the front month. And on the call side, I buy a strike above. Hopefully, it's a 2.5 point strike because that's less to lose in case it goes bad, which it was. And then I play the game come the announcement. Now, what did Palantir do? It opened up really big. Great earnings. It opened up, I can't remember, 15, 20 bucks, but that's about where the expected move was. What did my call spread do? Shooing! It went, expanded. So I did this whole package for $1.20. Okay. All four legs of $1.20 debit. I paid $1.20 for it. Call spreads opens up. I ultimately get out for $1.80 for just the call spread side. So now I have a free put spread. I sold it for $1.80. I still have the put spread on. The call spread's gone. I did the whole package for $1.20. Okay. So now no matter what happens, I got 60 cents in this thing. Yeah. Well, it had a couple days to go to expiration. You know what happened. Tuesday, Wednesday, everything reverses. The market sells off big. I've got the free lotto ticket here. It sells back down toward the put strike. Guess what I got out of put strike for? 210.
Nice.
So 180 plus 210 all of a sudden is 390 on a $1.20 spread. That's pretty good. Now, that doesn't always happen. It's happened to me twice, in the last 5 months on these things or whatever, the last 2 cycles. Typically, though, I will get out of one side and the other side just goes away and you make your one side and you're done. That's what typically happens. Sometimes you get the double bagger. You get the up and you get the down, right? In worst case, what I'll do, once I get into the call side, don't forget, I got a short put expiring. If I don't get that down move, I'll let the short put expire. I'll just keep my long put on just for fun, right? I got a free downside lotto ticket on just a long. If this thing craps out during the 9 extra days or 7 extra days, whatever it is, I hit a home run. What do you guys think about that? Yeah, I know you, Mark. I think you hate it, right? Well, one of you guys hates this spread.
Not necessarily.
I always kind of, I like, it's a good trade plan. For me, I like to do things that are Vega negative on earnings because I know that the pricing is such that the calendar won't be too bad, but I don't know. For me, the calendar has to nail perfectly, and a lot of times, if the expected move is wide and you don't move, then you're losing.
Yeah. That's a
even
good point.
though so I personally I would do double butterflies. I don't really play earnings all that much anymore.
Okay.
But that's for me, I kind of trend toward Vega negative moves.
Gotcha. That's fair. So that's a good point. I'm glad you said it because I want to make another comment. I've mentioned this before. So there's some mental mathematical gymnastics you can do with this spread that I built into a spreadsheet. We're going to actually add it to Tradier Pro so that you can see I'm going to call it adjusted volatility, implied volatility of a mixed month spread. It'll be available in the ticket when you do a mixed month spread. It'll compute what your implied volatility is, long or short, depending on what you're doing, right? Either you're buying the back month or selling it. It'll be a short if you're selling it, you'll be a long if you're buying it. We're going to show you that number. Now, I use that number, and it's a good point you made, because I do want to know what Vega I am purchasing, because I am purchasing Vega. And I compare it to probably around a 30-day implied historical. And if I'm near that zone, let's say it's a 55, I can sometimes get a 57, 58. I'm willing to take that 3-point risk, negative risk, to have the movement part of the spread, right? Because I'm almost never going to get beneath the 55. I'm always going to get around it, or not always, but I do get around it. Now, in MSTR, I was looking at it earlier in the week. It was much higher than 30-day historical implied, right? And I said, I'm not going to do this spread. I'm paying too much for it. It was too rich on both legs, right? And I didn't have a big enough disparity between front month and second month. But there's ones that are, like I did SMCI. That's been a good one. It's a little bitty price thing. It cost me, I want to say 40 cents for all 4 legs. You know, I'm getting out of it for 80 cents. That's, that's double. It doesn't sound like a lot of money, but you manage that by size. But yeah, that was a good trade too. I liked it, right? And I got the up and down movement on that one as well. So anyhow, that's a great point. It's coming in Tradier Pro, that mathematics. You're not going to know how to do it. It's going to be a stoplight: green, red, yellow. You're just going to know what to do when you see it. We're not going to show you the math on it. You're just going to do that. So, all right. Well, I know I see the time. We're eating it up. Let's do watch list real quick. I already kind of hinted at what I like to do. You guys have any thoughts on a watch list? Do you try to make your watch list around a diversity of products, or is it about liquidity and that sort of thing? What are your thoughts there? Yeah, I've already kind of hinted that I'm about liquidity. I don't care about the stocks. I just care about liquidity. Anything on your end?
Yep, I definitely agree with that. I would say the universe of names that I tend to track is the top 250 most liquid products. And that's like a somewhat arbitrary number, 250, but I've generally found that after that, things tail off pretty quickly.
Yeah.
And there's a big difference between 250 and 25 even.
Yep.
It's a downward sloping curve.
Yeah. Okay, fair. Yeah, Jason, you the same way or no?
Mostly, but I do have I kind of have groups the watch list tab. So it's like healthcare. So I have the most liquid healthcare, financials, the most liquid financials.
Great.
And I also have a macro one where I track the indices like SPX and Q, but also the VIX 9-day, VIX 3-month, all that kind of stuff. So I do have, and that's the one I end up on the most.
Okay.
I guess I'm trading SPX option structures.
Yep.
And but I guess you could say as an economist, somebody who's interested in looking at how the economy is going, I do have those other ones, so I could see we're rotating out of software today or something.
Yep. Like that. Okay, that's fair. So let me ask this question then, since for you, Jason, probably, and Mark, you can pile on if you want. If you have a sector watch list, let's call it, as you described, would you ever how do I say this? Would you ever dispersion trade the watch list, meaning have your back spread set up and all this, the stocks in the watch list in the sector, and sell an ETF or a broad-based index in that watch list that kind of covers those stocks to earn a little premium there and hope for moves in the underlying. I mean, again, the trading shops in the day have mathematical relationships where you should be doing this, but can a retail trader do that, you think? What do you think?
I do. I mean, when I'm doing dispersion trades, I tend to weight it based on historical volatility.
Okay.
And it's so that I can kind of right size my weighting, but yeah, I'll do a ETF, a healthcare ETF. Right now on Volant, on my little quad screener, I have within the healthcare ETF, there's pharmaceuticals, but there's also medical devices and a couple other things. The medical devices are looking very bullish. The pharmaceuticals are looking very bearish. So I kind of do that. I'll do varied things like that.
Okay, fair. Cool. Mark, any thoughts on this one?
My first thought is we should do an episode all on dispersion trading, or whether it's at obviously, like you said, the highest levels of quantitative dispersion trading, but even just simple trading. I think, that would be really fun. And do I have a tool for you? Because I have a little identifier that we'll pick the best names against S&P or NASDAQ,
Perfect.
whatever
Love it.
you want your index to be. What are, I only have capacity to do 3 names. Like, what would be the best 3? What would be the best 5? Well, so
that's great. I love that. That's awesome. Well, that's fantastic. And Mark, do you also do sector watch lists, or do you just do a composite one for yourself to pick your stocks or to look at your stocks?
I really just have one big bucket, and it's like my top 250. And I realize that's a little long for a true kind of watch list, but in terms of areas that I'm screening for opportunities, that's
okay.
my domain.
Yeah, fair. Mine's not 250. Mine, I'm thinking on the page is this long. That means it's what, 30-ish, 30, 40-ish. And you can imagine the ones that would be on there. I love the Mag 7 Plus, whatever the other ones are. So those are my favorite because they move a lot. I like equities that move a lot. I like indices that don't. So which one? What does that mean? SPX. What am I doing in SPX? XSP, selling crap, right? What am I doing in some of these other ones? Sometimes 2x1, sometimes selling stuff. Depends. Very simple things, taking direction or not in these things. But I can get in and out. And every once in a while, I'll pull up on the screen. I'll do a spread, and guess what the market is on the credit? It's like 25 cents, midpoint $1.50. Like 3 something, like 375 on the offer. I'm like, what? I go, holy shit, this is wide. And I'm like, do I do it? Because I'm never getting out. And I said, I want to hit the button because I'm an addict, right? But I don't hit the button, the send button. Get away from that one. But when I see, quite frankly, when I see SPX and it's, 15-cent wide market on an iron condor, are you kidding me? I mean, what am I thinking? That's an easy one.
I hope you're not short today.
What's up?
I hope you're not short today.
Oh, how bad is it?
Down 1.5% right now, it looks.
Let's see.
Oh,
Ooh,
wow.
I might not have gotten out. Oh yeah, it's a big one today.
OCC is going to do another 80 million contracts. That's great.
That's great. I know. All right, boys. Anything else? We got to go. This is a long one. Sorry, I talked a lot. I spoke
we're
a
over
lot.
VIX. It's a vol event today.
It's a vol event for sure.
Where VIX is 3 points higher than its implied spot vol correlation. That's a vol event.
There's a vol event. There you go. All right, guys. Good to see you. That's a wrap. Good conversation. See you next time on the Traders Workshop and after the bell.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.